Welcome back to your stocks and CNBC TV18. Nifty as of now still at the 24,420 levels is what it's trading at. But let's bring on board our experts for today. We have Shahina Mukadam, independent market expert, as well as Vaishali Parekh, Vice President, Technical Research at Prabhudas Lilladher, to answer all your stock-related queries. Good afternoon, ladies, and thank you so much for joining us on the show as always. Let's get started with the first query for today. This is coming from Vinesh Gupta, who's writing to us from Jammu. He's holding 300 shares of Anant. This is at a price of 590 rupees per share, making a loss on this one. And other is Sterling and Wilson. They're holding 500 shares. They've bought it at 320 rupees per share. So here also they're making a loss. Now he wants to know the long-term story for both this Anant as well as Sterling and Wilson. Shaina, good afternoon, and what's your view?
Yeah, good afternoon. Yeah, so basically he's making, I think, a bit of loss on both, but it makes sense to continue to hold. Anantraj and the numbers of both the companies were pretty good first quarter numbers. They both have reported. Now, Anantraj actually residential revenue over the next 2 to 3 years will, remain more or less stagnant or marginally decline. But you have the data center that will actually, start contributing in a big way to revenues, which actually, as of now, is minuscule. So to that extent, you can hold for the long term. Valuations, I think, if you compare it with, let us say, solar, with the Sterling and Wilson solar, is slightly more expensive. So if you want to hold one of the two, I would prefer holding the SW Solar. SW Solar now, as you know, is part of the Reliance Group, and they have done well. They have got a very good order book position of 9,000 crores. So I would hold it for the longer term.
Okay, you would hold SW Solar for the longer term. That's the view coming in there. Vaishali, good afternoon. And on the technicals, which is looking better? And he's okay to hold both the stocks as well. Does it merit holding both of them?
Hi, very good afternoon. I think it makes sense to hold both these because they are showing signs of, I guess the worst is over because both these stocks are coming out of its oversold zones. And talking about Anantraj to start with, I think 500, even the long-term chart is good, and we are seeing a bounce coming from the retracement. The previous high that we've seen is 1,000 levels, and now it's nearly 539. So keep a stop loss of 500 because we are seeing a cluster of support levels at these levels and wait for it to bounce. The stock would gather more strength once it sustains above 650. And now talking about SW Solar also, I think it is an attractive level probably to average out at these levels and hold for a better bounce back.
Okay, hold for a better bounce back. That's the word coming in there. Let's move on to the next query. This is coming from Prasanna Kumar, who's writing to us from Chennai. He's holding 100 shares of Spandana Spurti. This is at a price of 460 rupees per share. This is average price. So currently the stock is at 249. Now he's asking if he should average further or wait for what should he do right now? Is the current level to average? Wait for a further correction? What should he be doing? Shaina, your view on Spandana Spurti. They're not asking if they should sell. So I think they're willing to hold. But is that a suggestion that comes in?
See, he has to take very urgent, immediate action. There is a rights issue which is ongoing. The price is at around 220 rupees per share. And I think today, yeah, Monday would be the last day for application for the rights. So either he sells the rights entitlement today, or I think latest Monday if he gets that opportunity. Or then, I would not advise him to do anything as of now in terms of the rest of his holding. He can look at it post the closure of the rights issue next week. But I would say, it is better to switch from Spandana Spurti even at a later stage. While valuations are not expensive, the results are not out. They're making losses, continue to make losses. So I would say there are better opportunities available. But at least rights issue, please take immediate action.
Okay, rights issue is at least something as an immediate action that you can take right now. Spandana Spurti on the charts, Vaishali, any respite or any bounce back that's expected here, or, it's better to just get out of the stock? What's your suggestion?
I think it's better to give it a miss and shift to the other stocks.
Okay. Better to give it a miss and shift to other stocks. That's the word coming in on the technical front as well. But let's move on to the next query then for today. This is coming from Kunal, who's writing to us from Jaipur. He's holding 145 shares of Lakshmi Organics. Average price is 460 rupees per share. Again, one more stock where they're making significant loss, right? So he's asking if you should stay invested in this one for the medium term or exit at these levels. Even is average an option for this as well? Shaina, your view?
Yeah, I wouldn't advise to average. while valuations are not expensive, it's about 1.5 times revenue. But at the same time, we have US now with the tariffs, the uncertainty for chemicals, agrochemicals. So I would say that it is better to, not add now. You can look at any bounce to actually exit.
Okay, look at bounce to exit. Don't add more. That's the word coming on the fundamentals. On the technicals, Lakshmi Organics, what should we be keeping an eye out on now? When you're looking at the share price also, in the last 1 month, the significant we've seen a 4-5% fall. Last 6 months also not done anything exciting, Vaishali. So now what's the strategy here?
Actually, even technically, I would say it's not showing any signs of improvement, whether it's on the daily chart or even on the weekly chart. So, unless and until the stock moves above 200 levels, I can say that yes, expect a bounce up to 220 or so to start with. But if one has to hold, keep a stop loss of 180. It's close to the crucial support of 180. So, keep a stop loss of 180, and if it breaks, then it could witness further selling pressure. So I would suggest hold with a stop loss.
Hold with a stop loss. That's a view coming in on the technical front. But we have Grasim that's reported the numbers as well. Losses seem to have widened. Revenue seems to have increased. We'll wait and see if there's any one-off that's in the loss as well. But as of now, revenues is up 34%. We'll keep an eye out on the numbers. That's Grasim's Q1 FY26 numbers flashing at the bottom of your screens for you all. Stock is, as of now, also trading with cuts of 1.5%. One spike up that you can see in the last few minutes that has come in. But wait out for more details on that number. Let's move on then to the next query for today. We have Alan, who is writing to us from Kerala. He is holding 200 shares of UPL at a price of 689 and 100 shares of Electra Green at a price of 1,144. So making some bit of a profit on both these. What is the future prospects of his investment should he continue to hold them? That's his query. Shahina?
I would suggest he takes profits of both, book on both the stocks, UPL as well as Electra Green. Electra Green, actually, there was a lot of news that they are not able to actually meet their manufacturing targets. And because of which, even the Maharashtra government is, I believe there is some news that they have actually cut some orders that they had placed. Valuations are extremely expensive. So take some profits off the table. Stock has performed actually. A similar story for UPL. First quarter numbers were very nice, healthy, and even the guidance for the rest of the year is good. But here again, I think the sword of US tariffs holds for agrochemicals, and US market is big for UPL. So I wouldn't take the risk. I would just take money off the table and then relook at both of them in a couple of quarters down the line.
Okay, better to just get out your profits instead of, seeing some losses. Maybe you can look at it a couple of quarters later, is the word coming from Shahina. Vaishali, your view, Electra Green Tech as well as, the other stock that the viewer mentioned was UPL, I beg your pardon. So both these stocks, what should they do? Electra Green Tech had seen that very sharp run up also last couple of years, and then these issues that came up, which China was also mentioning. On the technicals, does it merit holding? Could they see some more profit in the near term?
I would say so. Actually, long-term trend is very intact. And if I were to talk about the weekly chart, the stock has taken good support of 1,000 levels. And even in the nearest rally, what we have seen witnessed from 1,100 levels, it is on an upward move. We do see a resistance coming at 1550, but I would say there is no damage to the trend. So continue holding with the support of 1,300. And if this sustains all this choppiness, what the market is offering right now, and if this moves above 1560, 1600, in all likelihood, this can go towards 1800. So 1300 is the level to watch. If my view gets negated if 1300 levels break. So for now, it's a hold in this particular stock. And talking about UPL also, so I would say a well-booked partial profit, but this too is showing signs of improvement on the weekly chart. So partial profit booking is suggested, and once you get a dip near 660 or so, I think weekly chart, what it call one can infer is that yes, if it crosses 730, 740, it's ready for a target of 780 and higher. So I would say hold with a partial profit booking strategy.
Hold with a partial profit booking is the word that's coming on the technical front. Let's move on to the next query, and that is on Eternal or Zomato as we know it. Shashank Bardwaj is writing to us from Noida. He's holding 100 shares of Eternal at a price of 250 rupees per share. Wants to know if he should remain invested in this one. Obviously, Shahina, just yesterday, we had the news that it came in that Anfin was also selling stake, and this has happened over a period of time. What are we watching out for now in terms of Eternal's numbers? Good numbers that came in Q1. Should they continue to stay invested?
Yeah, so Vinny, the numbers were very good in the Q1. And while we have food delivery that is showing some bit of slowdown, the management is in fact showing also guiding for lower numbers in growth vis-a-vis what we have seen in earlier years. At the same time, you have the quick commerce, which is actually growing very fast. There is some pressure, likely to be some pressure because of the margins on quick commerce because of the expansion of the dark stores. But I think overall, it's better to remain invested in Internal. And it's not a stock that you trade in. It's a concept stock, long-term positive, continue to hold.
Okay. Let's move on to the next query. Actually, no. Vaishali, your view on the technicals as well.
So the fact that it's maintaining its uptrend implies that it has a good, strong inherent strength. And purely on technical terms, 290 acts as a support. Right now, it's in a retracement profit booking to a consolidation zone. So as long as 290 levels are held on, I would expect a target of 330 to 350 in times to come. So it's a strong stock for now. Continue holding.
Okay, next query for today. Ritu Singh is writing to us from New Delhi, holding 100 shares of City Union Bank at a price of 150 rupees, is asking whether to hold or exit at the current levels, making a profit on this one. Shahina, your view?
I would suggest continue to hold. Valuation, not expensive. Price to book, 1 year forward, about 1.5 times book. If the first quarter numbers were quite healthy, they are showing improved performance across the board. The provision coverage is now pretty healthy. They have got about 60% provision coverage. So it's a hold.
Okay, and Vaishali, your view coming for City Union Bank?
Well, I think it's a strong and a gradual upward move. So I would say continue holding. 200 acts as a support. And if it's for a long-term perspective, please continue holding for a target of 240 and perhaps higher. So yes, it's a hold from my side.
Okay, a hold coming in on the technical front. Let's move on then to the next query for today. This is coming in from Adil Mansoori, who's writing to us from Gujarat. He is holding NetWeb Technologies, 5,000 shares. This is at a price of 1,700 rupees per share. Wants to know whether he should continue to hold or exit at the current levels. NetWeb Technologies, Shahina, a smaller IT company, but overall in terms of numbers also seems like a decent set came in this time. But how should he be placing his strategy given that he's making a profit?
Yeah, Vinny, actually, the numbers were very strong. Doubling of profits, very good turnover growth. And then the AI segment, which actually is the, I think the future of IT services or even industry. So it is, of course, you can't talk in terms of PE and valuations because they are very expensive. It's a small stock. But the investors got in at a decent price. I would suggest he keeps a very deep stop loss. So just in case something goes really wrong, but otherwise you continue to hold in my view.
Continue to hold on the fundamental front. That's for NetWeb Technologies. Vaishali, on the charts and technicals, NetWeb, what should it be doing? Given that, the last few trading sessions also, we've seen that run up coming for the stock as well. What are we watching out for now?
Chartically, it looks very attractive. We've seen the profit booking coming from 3,000 levels, and now it was showing some base formation at 1,400. From there on, we are seeing the stock making higher tops, higher bottom. So I would say, yes, the stock still continues to show strength. I would say keep a stop loss of 1,800. 1,800 is the level to watch and get into, you can add furthermore if it sustains and look for a target of 26 to 2,800 from here on.
Okay, that's the view coming in there for NetWeb. But that was the last query for today. So thank you so much, Shahina, as well as Vaishali, for joining in with us on the show and giving us those insights. But with that, viewers, we're going to wind down this edition of Your Stocks in CNBC TV18. Thank you so much for tuning in. Remember, you can always email us your queries at the email address that will be flashing on the screens for you all. So do send us your queries, but don't go anywhere. Last hour of trade is still left and you have closing bell up next for that.